हेलो फ्रेंड्स। आज हम सेबी के बारे में पढ़ाई करेंगे एंड वी विल ब्रेक डाउन completely the SEBI syllabus for the year 2018. So we will start with the basic topic of SEBI, and the main topic is the securities market. In the security market, the first one is the Indian financial system. Basically, Indian financial system has four parts. This is the financial services, financial assets, instruments, financial markets, and financial intermediaries. So, in this, there is a lot of things to know about Indian financial system, its structure, and various government-based part like finance commission, financial administration, receipts of government, expenditure of the government. Next main topic is the capital markets. Capital markets can be divided into two parts. The first one is the primary market, and second is the secondary market. So primary market is the market in which the company first time initiates its initial public offering to the people, to the public. So in this case, company open its initial public offering to the public, and investor uh, invest their money in the IPO, and it is called primary market. So primary markets, after that secondary markets means the already the shareholder or already the the people who have already buy any share in the company, they sell their share to the other people in the market. So in this case, that initial public offering is not available, it is available only in primary market. So primary market have example is IPO and FPO, and secondary market example are BSC, NSC, that is stock exchange. It also have part like brokers, then how to trading in the stock exchanges, that forward trading, then stock and index, as I told, BSC and NSC, depositories. There are two main depository, one is NDSL, one is CDSL. The NDSL is the part of NSC, CDSL is a part of BSC. So this depository basically will be used to deposit the documents or deposit the any legal share documents in these two. So any new investment or any share purchasing document should be registered with the either of NDSL or either or CDSL. So these all are regulated by the SEBI. Next is the bond market. Bond market compared to this stock market is less volatile, and it's particularly it is controlled by the RBI, while this capital market is controlled by the SEBI. So in bond market there is a money market. Money market, it is not long term, it is a short term market where money is being raised in the short period. Another is a government security market. In this case, the government issues its security for a longer period, and it is highly secured compared to the other format, because in this, whatever the inflation is being raised in the country, that is also calculated and it is also adjusted in the government security market. Next is the corporate bond market. In this, any company raised its fund by putting its securities in the market, and it is called government security bond market. So this bond valuation and how much duration and sensitivity and risk we will discuss in the later on in this video. Next is the foreign exchange market. Foreign exchange market plays a vital role in the any economy. So, Reserve Bank of India is fully responsible to be this foreign exchange market for the India. So, as of now, India has touched the $400 billion in foreign exchange reserve. So it also is basically depends on the trade of this any country. So if the import and export, these are the two main factors which decides the foreign exchange reserve of any country. So in this, India has this Foreign Exchange Management Act, which basically control the how money is being flow out of this country, and how money is coming inside this country. In the part of this currency convertibility, that is, if any foreign currency is being converted in the Indian rupees, then there are some rules. Then after this, currency forwards, future and options, these are the trading things also available in foreign exchange market. So there is a very strong relation between money market and foreign exchange market. Money market, in this case, if government want to control the inflow of the money which is being which is being injected in the Indian market by foreign exchange, then RBI issue a various instrument to control the liquidity of the market. So inside the money market, there is one instrument is the OMO operation, like open marketing operation. In this, government on behalf of government, RBI issued securities in the form of OMO instrument, and if there is a lot of liquidity in the market, then by OMO operation, the RBI is excused. RBI like reduced the amount of money in the market. If it is the less amount, then if there is a requirement of liquidity in the market, then RBI can control its CLR, CSR, SLR, CLR, and its repo rate and reverse repo rate. So this commodity market has been recently introduced in the Indian market, and various metals, non-metals like gold, copper, and various like agriculture commodity like this wheat, sugar, rice, all this commodity can be like can be traded on this in this market to avoid any risk. And next is international capital markets, and this also being controlled by various international organizations like IMF, then there is BIS, and this World Bank. So there are a lot of many players in the international capital market, and there are many people from across the world involved in this by various instrument. One is the FTI and one is the FPI. FTI is the basically if the foreign investor invest his money in India, so and FPI is the in the investment in the share market. So thanks for this your support. We will discuss rest in the next video.